Hi, Framework members. Welcome to another one of our monthly trainings for you guys to help you get implemented with the program and kind of help you know the best practices for inputting your numbers so that this program can be effective for you and your school or schools. Today, we have with us Taylor Leaphart, one of our financial analysts, and Christine Mailer, who is a Success Services financial coach. Both of these guys have amazing financial brains. They're one of those people that love a spreadsheet. I'm not. So they are great people whose brains to pick, especially when it comes to framework. They work in this program with clients and have worked on the client side. Taylor used to work at for a childcare business for their financials. So they know what they're talking about and they are great resources. So I will let them take it away.
Awesome. Thank you so much, Meredith. We're super happy to be with you guys today to kind of dive into what we believe is a revolutionary tool for you and your business, especially from a financial perspective, but also implementing it into your operations can be just as much of a powerful tool and really getting you to a sustainable and profitable place for you and your childcare company. To what Meredith was saying, that we are absolutely spreadsheet people, so much so that we took a spreadsheet that was developed out of decades of experience from Kathy Ligon and benchmark understanding of the industry. From that spreadsheet, we integrated it into a web app, which we now have today through Framework. And so over the last couple of years, we've really tried to pour in a lot of resources, building up a lot of content, as well as getting as much user feedback as possible to continue to evolve that what was a spreadsheet now is a web app, and to make it as convenient and user friendly as possible for all of our childcare clients. So without any further ado, I would love to just jump into our today's agenda. Um, and so we can get started. So what we want to walk through first is what is Framework. We touched on that a little bit, but also what are some best practices as we're walking through and some implementation, kind of tips and tricks as you're getting your numbers inputted into the system. So inputting your numbers is always going to be the first step. Reviewing the reports and insights and what if games. This is probably one of my favorite portions of the tool. After you've gone through the very meticulous process of matching up your financials with Framework, the fun really begins. You can start to see the awesome graphics that we have that show you your financials compared to the industry standard, and start to play those what if games. If I lower here and I increase here, what does that do to my profitability? Some really great stuff that's on the back end of this webinar that we'll play through. And then we'll wrap up with some recommended best practices. Now that you have Framework at your disposal, what's next? And that's where my really good friend Christine comes in and taking those next steps with you and making sure that you're really sinking your teeth into all that Framework has to offer and making sure that you're taking those leaps and bounds from a financial journey perspective as well. And then going further, just that, what are some things that we have on the horizon that you can take part in to increase your financial knowledge, but also get you well on your way to a profitable and sustainable childcare company? And first to do, what is Framework? As I was saying earlier, is a financial app that was born out of a spreadsheet, out of industry experience, getting into the weeds of financials within the childcare industry for decades on different analysis and different client projects, cultivating all of that industry experience, putting it onto a spreadsheet, and then ultimately now bring it to the end user and client through a web app so that you can really tailor all of those benchmarks and industry experience that we collected based on your school size and your tuition rates. So the model is very clever in the way that it functions. So at the very beginning, you'll see as we walk through a demo, one of the first things it asks is for your capacity and your tuition occupancy. So based off of those metrics, it flexes those expense metrics based off of your size of your school. So that gives you a comparable result, something that you can really compare to and strive to achieve as you go along your financial journey. This tool, as I was saying earlier, we really want to cultivate that financial knowledge, increase your profitability. But with those what if games and those other insights that this tool provides, it opens up a new world of opportunities for you to explore to make sure that you're hitting good milestones and taking care of not only your, your families and your children, but also your staff and your internal family, and making sure that you're providing them with as much opportunity and growth as possible. And you can really only do that if you're achieving financial health from your operations. Jumping into some best practices. So come prepared. What do you need right out of the gate to start inputting your numbers and really getting the maximum value out of this model? You want to bring your tuition rate sheet, current enrollment, and profit and loss statement. Make sure that those 3 documents are on hand throughout this entire process, and make sure that the period at which they're reflecting matches up. So if we're looking at a full year 2022, let's make sure that our tuition rates reflect 2022, your enrollment was 2022, and your profit and loss is also 2022. We always recommend the most current information you have. Let's get that into the model so we can find immediate results. So if you have a trailing 12 or a rolling 12 months, so we're probably looking, if your accountant and CPA is really good, you have October numbers. But if not, that's okay. Let's just jump back to September and the 12 months prior to that. So make sure that you have the enrollment information and tuition rate sheets that apply to that as well. We also encourage you to take breaks. We've segmented out all the entire tool into 5 different portions between tuition and occupancy, discounts, staff, facilities, and then other operational costs. So there's a natural breaking point between each one of those segments. And we always encourage you to take a breath. If you get a little overwhelmed inputting all of these numbers, trying to figure out which number goes in the correct spot, this is a great spot to just take a breath, get on the phone with Christine, get on the phone with me. We'll walk you through the process, give you some encouragement along the way, and assure you that all of this buildup, all of this inputting of numbers will be absolutely worth it in the end once you see the tool kind of work in your favor and give you some great feedback. So with all that out of the way, Christine, I feel like we can just jump right into the demo. What do you think?
Absolutely. Yeah. And you're going to talk about enrollment right now. And this is a key area to focus on a daily basis, right? Because enrollment is everything. There's 3 main areas to focus on, and that's the enrollment itself, keeping the classrooms full, and the tuition, pricing, and expense management. So think of those 3 things, and you're constantly looking at all 3. So Taylor, as you dive into that, well, we can discuss that a little bit more.
Yeah, absolutely. And jump in anywhere as we kind of walk through, because I know you have awesome implementation tactics and things like that with your clients that you walk through much more regularly than I do from an analyst perspective. And I want them to get as much feedback from you as well as we walk through here. So this is the landing page from Framework by Hinge, where all of the tool is housed. And just to point out a few areas here that we're continuing to develop and add content to is this top right-hand corner right here. So we have all of our webinars saved, including this one. We've recorded them and housed them into a YouTube playlist, so you can go back and review all of the webinars, including the framework sprints, which are a little more bite-sized pieces and more topical in their discussion based. And feel free to just explore this. The model has also integrated and gives you feedback based on the numbers that you input, which of these videos would be most helpful for you at that time, as well as the articles and some of our blog posts. So all these run parallel. We have great content that we put out on a regular basis. Some of these are weekly, a lot of these are monthly, but we just want to provide you with as much information as possible so that you can be well equipped to not only use Framework for your benefit and implement that into your operations, but so that you understand what like best practices are changing and evolving within the industry as they go about. Because this, especially within the last 18 months, is a rapidly changing industry, and it feels like we're just on the heels trying to keep up. So we want to make sure that we pass on all that knowledge as we get it as well. So diving into the tool, this will be the landing page. Once you sign up, once you get acclimated and get your profile set up, This will be the landing right here. So we start with some basic information about your school, address, location. And this really just gives the model an indicator of what market you're operating in as we move into the meat and potatoes of the tuition and occupancy. This is where everything starts to evolve and get tailored to your specific financial needs. So at the very top, the basic financial information, one thing to point out here is this will be your annual net revenue before discounts. So we want to segment that out. So this will be just pure tuition based on your enrollment and your tuition rate. It should match up 1-to-1. So we want that whole dollar amount here. And then your billing period, which could be monthly, could be weekly, bi-weekly. In some cases, it will be annually. And then the corresponding billing period here too. We strip out discounts because we think that it can be something that is one of the silent killers of your profitability. So pulling that out, giving that its own designated space to have a little bit of analysis and be sliced and diced a little bit, just gives you better feedback in the end. And that's what we found for all of our clients through our feedback, is that understanding those discounts really helps them with the full picture. So we gave it its own dedicated space. So walking through the tuition and occupancy, just a few more general questions of, how are you compared against the competition? When's the last time that you've increased your rates, and what was that increase? Based off of what we've seen in the industry thus far, there's been a lot of change in this area within the last 2 years, and we've input a lot of that information into the model. So that gives you good feedback and good benchmarks as to where you should be increasing and where you should be in terms of competition as well. In terms of tuition rates and group class, this is where we've really started to evolve the way that this input works. We want to make this very dynamic, so we adopted a matrix approach where you can add a classroom, input the capacity of that classroom, and then add the different pricing segmentations that you have for that classroom. So you can see here for your infants, we have a full-time rate, and we have a part-time rate. We can add those rates as well as the children that are enrolled for that designated rate within that classroom. So you can see how it kind of Easter eggs out a little bit so that we can really get into the detail and drill down into where each of those dollars are going. And this is also a really good point in time as you're adding all these different segmentations. There could be, in very many cases, where this part-time rate really doesn't fit you. You're more in the 3 half-days. You have a 2 half-day offering, or you have a 4-day, 3-day, 2-day offering. And you can add all of those as we go. And Christine, I love adding you into this piece because you've seen this firsthand. This is one of the places where you can start to find maximum value in limiting your offering and consolidating what you're seeing as far as tuition pricing.
Yeah, this is the opportunity to restructure your pricing model for sure. That sometimes we get really complicated with multiple part-time fees for the services. So rethink that at the next tuition increase or the next school year, and how you can simplify it, make it easier on yourselves. Also, the opportunity is, well, what I recommend is that you track your enrollment, on a Google Doc or some kind of app, and then populate it in here. And you can play with this daily, weekly, monthly, however you choose to, but it will really help you to really stay on top of that. We are finding that even though we're increasing tuition and we're managing expenses, we're losing sight of what's really happening in the classroom. We think we know what's happening, but what's actually happening is our FTEs aren't what we thought they were. So great opportunity to revisit all of that.
Yeah, and breaking it down into a consolidated offering between full and part-time, just say, really impacts that FTE number that you were saying, and then it kind of snowballs into how you allocate your staffing costs. So this can be a really compounding area where if you spend a little time and understand your numbers here, it can pay dividends very quickly. Just for a quick little demo, I would love to walk you through adding a classroom here. So if we had an after-school program or after-school classroom, we'll add that group here. And as my computer thinks, we'll say that we have a 30 capacity classroom two different offerings with the full-time rate of, I don't know, let's say 125, and then a part-time rate of 110. We have 15 enrolled in full-time and 10 enrolled in part-time. So based off of that information alone, it'll circulate through the model and allow us to input some different metrics as some of in various places in the model as well, because we've identified our classroom, the different scheduling and tuition offerings that we have for that classroom, as well as the capacity.
Taylor, we're also seeing more and more of the grant situation where they're required to keep 16 children in a specific classroom. So we could set that up as its own area or group, right?
Absolutely.
In this specific, an example is Great Start Ready program that we have in Michigan. They're popping up all over the place. We've got now Illinois has got a few different that have to be tracked specifically. And we're finding that they have to keep X amount in that classroom to get the reimbursement and the grant funding. So that would be another opportunity to track that separately as its own classroom.
Absolutely. That's a great point. Because so much of those grant funding are dependent on your ability to track those expenses, right? So I think that's a great opportunity and a great utilization of this tool for this piece. And if you have any questions as we're walking through each one of these segments, please feel free to just jump into the chat, enter your question, and Christine and I will take it on the fly as we walk through these different segmentations. As we're thinking about grants, I also want to clarify that this net revenue number is purely tuition. And I would say any fees associated probably can go in here, but if you can keep it purely tuition, it allows you to get a better understanding of where those tuition dollars are landing in the model and how you can take action and really maximize those values as well. So not seeing anything in the chat right now, we're going to save and go next and dive into our discounts.
Taylor, just to be clear on that income or revenue, you know, the grant reimbursement money is a revenue stream. The CACFP is the food program. The subsidies that are separate, that is tuition based, correct? I mean, is that what you consider? Okay.
Yep. All those things. And even to that point, kind of what Christine was mentioning earlier with a lot of those grants having to segment out a lot of your expenses. I think you could also do this with subsidy as well, if that applies, just so that you can keep track of where's going where and a max cap of the head count that you have dedicated for that individual subsidy and revenue streams. So a lot of different ways that tool can really be maximized. And again, a lot of those are very unique and a little bit nuanced, but Christine and I are more than happy to walk you through any of that and what would be most practical for your operation when inputting your tuition as well. Stepping into discounts, so we can see that there is a row for each level of discounting that I have that matches the classroom that I indicated in my tuition occupancy section earlier. So we added the after school program and we can input their discounts here. So this matrix operates with the classrooms on the left, and then on the top is our discounting type. So we have a multi-child discount, a staff half and a staff full discount. And for the demo's sake, we can add an industry discount. And let's say this is a 10% discount that we give to a neighboring business that we want to provide childcare services for, give them some incentive to come over to our services. So you see how the matrix is uploaded and updated for the additional discount as well as it's holding my classroom. So let's say, you know, multi-child, I got 5 there, 2 there, 2, and infants and toddlers are always there. Or okay, so that's how you input it, and this would be how many of those children within that classroom are taking advantage or are actively enrolled in that discount. So for example, the infant classroom has 0 multi-child discount at the moment. However, there are 3 staff half discounts and 1 full staff discount and 4 industry discounts in the infant classroom at this moment. That's just kind of how that layout works. I like the way this is set up because it's really intuitive based off of the inputs that you have for your tuition occupancy. And even if there is a cap on the tuition that you can, or the rate that you can provide for any classroom discount or classroom segmentation that you're offering, this could also be another way to maximize that and have those numbers reflected in the tool as well. But from a discounting perspective, I like the way that we've laid it out. It's very intuitive given the process. But again, we want to give it its own designated space to have these inputs laid out into the tool because it does need that dedicated attention. Christine, and in your use of this tool, what other ways have you found kind of that are impactful when looking at discounts?
Well, I'm having palpitations over the amount of discounts you have in there, right? Yeah, this is a lot of discounts and it's hidden profit. This is another opportunity to revisit this. And it doesn't have to be black or white. It can be a gradual process where you start eliminating the types of discounts. So the most common being used now are staff related. And even then, you've got staff members, young staff members that are having 3 and 4 children, and that's going to be very expensive for a center. So pay attention, because if we don't pay attention to this area, we don't realize how much money is involved here.
Exactly right. And so often a lot of like childcare owners, they got into the business because of the passion, they want to care for the children. So a lot of times they lead with their heart without understanding the profitability ramifications, and that can snowball very quickly. So to your point, this is definitely a worthy place to spend some time and understand. Not seeing any questions come up in the chat, so we're going to save and go next. And as we dive in and transition from our top line into our expenses, there's a little bit of a layout difference and coming into the expense sections. But the good news is that all of our expenses are fairly laid out in a very similar fashion. So once you understand what we're asking for staffing, we ask very similar structure for facilities and operational expenses. Staffing costs, hot button, big topic. We want to make sure that we spend a lot of time inputting the correct information in the right way, in the right places for this section. So right off the top, we have salary costs for the period in which you're reflecting for your P&Ls. This is a very good place to stop and kind of evaluate, if you are an owner operator, your compensation and how that fits into this number. That can be played a lot of different ways, and there's a lot of different ways that we've seen it, and all of them are the correct way. The way that an owner operator in a director position or a position of leadership is compensated vastly is dependent upon their personal finances and their goals as an individual. So we have a lot of people that choose to max out a W-2, and they're treated just like any other employee from a payroll perspective. And then on the flip side, there are some that take a very modest compensation, maybe have a few personal expenses within the P&L, but they take no true salary and they take out an owner draw on the back end. All of those options are very fine and we see them all the time. But for this particular instance, we want to make sure that we adjust for your compensation. So if you are one of those people, speaking to the owners and the operators right now, if you are one of those people that choose to have a W-2 and your salary is reflected in this number, we want to adjust your salary to a fair market rate for your position. So if you hold the title as a director, we want to make sure that your salary is adjusted down or up, however it looks for you, to what a comparable position is paid within your market. So that, I mean, that may look a lot of different ways. We want to make sure that it's true to your market so that the benchmarks reflect the same. Because if you're taking a significantly greater salary, the model is going to say, hey, your staff costs are way out of line, which honestly, in actuality for your operation, is probably not the case. It's probably just that one number that's skewing your entire results. So let's make sure that we keep that in mind as we're walking through. If you are an owner operator, let's just make sure that we're adjusting for that salary, showing a fair market value or fair market rate for your position. And as we move down, we kind of get a little bit more granular and step down to show payroll taxes, employee benefits, staffing, recruitment, and other staffing costs. As we walk through for the other expenses, it can be really easy to get caught up on, oh, I don't have a dedicated recruitment line, but there's some other things that could be recruitment. Should I put it all in there, or should I try to itemize it out and put it everywhere else? I always say it's way better for this model for you to be consistent and track where you're putting what expenses where, rather than spinning your wheels and inputting and slicing and dicing your P&L to match this P&L on the fly. Christine offers an awesome resource in matching and aligning your chart of accounts, the back end of your financials, to match exactly what framework is displaying here. And that makes the transition, the use, and the feedback all the better whenever you're looking at your financials versus what framework is telling you, and reverse. I know, Christine, that is an awesome service that you provided, and I know that clients really appreciate it when it's all said and done and seeing the results as well.
Yeah, we actually do not use anything miscellaneous or suspense. So that area is for your current P&L if your categories do not align exactly the way they are here.
Yep.
But we absolutely do align all of our account categories. We refer to that as the chart of accounts, and the chart of accounts is what makes up your financial statements, your profit and loss, as Taylor's talking about it. So do the best you can to take what you have and populate it into what you see here. It's okay to combine categories that are on your P&L, but if you don't see, you have something and you don't see it here, you just throw that into the miscellaneous field.
Yeah, that's right. And we have these little icons on most of our line items, and it kind of gives you a little bit of indication of what exactly we were looking for this particular line. So for miscellaneous staff costs, we have any employee meetings, gifts, uniforms, things of that nature, that may not be consistent across all childcare P&Ls, but absolutely are can be seen a lot within the industry. So like Christine was saying, just consolidate those into the miscellaneous, and if need be, we can revisit as you use the tool.
We also separate the officer salaries and bonuses on the profit and loss so that you can see at a glance what it is compared to what fair market is.
Awesome. One last thing to point out here, and this is true, we make a note of it right here at the very top because it's consistent across all of our inputs, is that if you truly have a line item that is zero, meaning you have zero cost for that line, we want to input zero rather than just leaving it blank. If we leave it blank, the model will assume the benchmark expense into your P&L. So if you truly had zero staff costs or staff training, excuse me, and we input that here for nothing, on the back end of this model, it'll have your inputs, but for staff training, it'll show $3,915 rather than a zero. So it'll skew your numbers one way or another. So let's keep that in mind as we're walking through here as well. So in this case, we have $5,000, and we're going to save and go next. Still not seeing anything in the chat. So Christine, we must be doing a really good job.
No questions today.
No questions today. In the same format as we kind of transfer over into facilities, very similar layout, but let's kind of tackle what the headline up here is asking for here. So for facilities, your main contributor to that section is going to be your rent. We want to make sure that we segment that out so that we kind of understand what your base rent is compared to your common area maintenance, if that's something that is included in your lease, as well as the facility square foot. If you are someone who also owns the real estate and operates the business, I would say input something in here that feels right, maybe even just your mortgage payment. I would even say, if you're not charging the business anything, I would at least start at your mortgage, even though that's going to be a low, or for the most part, it's going to be a lower rent value, based on the industry standard or the industry benchmark that you'll see in the model. It'll be a good starting place for you, and it'll start the conversation, maybe get the wheels turning on. Maybe I should put a formal lease in place, maybe integrate some of that revenue components into my own revenue stream. And the advisor team, as well as myself and other analysts, we can talk through all of those different avenues for some success planning and kind of exit strategies as far as layering that out. But for whatever information you have available to you right now, let's go ahead and add that to the model, and then we can work off of that. The last distinction is that we do have this split out there. If you do have a formal lease, odds are that there will be some other management fee or some other items such as like landscaping or common area usage, things like that, charges that are on top of your base rate. And we have a dedicated section for that so that we can take that into account for a full rent number as well as your facility for square foot. We said that earlier. Walking down, you can see it's the exact same layout. We've itemized a lot of the most commonly seen line items within the facilities, the repairs and maintenance section of your P&L. And very similarly to the staff costs, if you are in doubt of what we're asking for an individual line item, we have the icon buttons right here, just to give you an indication of what we're looking for and what those numbers might be from a benchmarking standpoint. And to Christine's point for the staff cost, it applies here too. If you don't have something that fits into any of these buckets, or you might have something that fits into multiple of these buckets and you're not really sure, just take note of that. Make sure that you input it into the model. And if something is not listed here, let's make sure that we capture it into the miscellaneous building costs down below. Anything to add here, Christine, while we leave?
Well, these are typically fixed costs, right? They don't fluctuate as much as the enrollment, the cost related to enrollment. But I will say that if you are looking at strategy or owning the building and you want to create a lease agreement between your centers and your LLCs under your buildings, make sure you also, besides the transaction team and Taylor, make sure you talk with your tax professional too. The best way to leverage the two entities and how you, as the owner, can bring home more money in your own pocket through that strategy.
Absolutely. That's a great point, Christine. Thank you. Not much to add here, and we're still doing a good job, Christine. Don't see any questions in the comment box. So I think we're going to jump on to the operational expenses here. So we're save and go next. Same format, but this is by far the largest portion of the inputs, rightly so, because it includes your program, your admin costs, any other curriculum-based or admin-related expenses are all housed here and can be seen and inputted and in that way. All the same, we have the most commonly found line items here, as well as little icon buttons to kind of guide you in what you are inputting, as well, in addition to the benchmarks off to the right-hand side. Nothing noteworthy to come out of here outside of what we have added down here at the bottom. So we've included some other expenses and other revenue portions into this section so that we're kind of capturing a full picture of your operations. Also from a non-cash perspective, things that aren't necessarily attributed to the operations of your business, but things that your business pays for. such as interest payments, depreciation, amortization, and franchise fee costs. All those things can be in placed here. They really don't fall into any other bucket outside of that. So we want to give them their own dedicated space, just so that we can also put a magnifying glass to it and give some analysis on the back end as well. And to kind of round that off, we have a grant portion here to capture that additional revenue that you're seeing on the top line. So make sure that we're not including that in the tuition portion unless that is related to enrollment and classroom size. We can capture that because we can put a value dollar to it, and that is incorporated into your own overall enrollment. But if this is just blanket grants, such as like PPP or even the ERC grants, things like of that nature that are more up to your discretion as far as how they're used and implemented into the dedicated spaces, let's add those revenues here. And outside of that,
easiest way, Taylor, to think about that is the one and done grants and the ongoing reimbursement grants. Those go up top. The one and dones go down below.
That's exactly right. So these, fittingly so, are down below, one of the last inputs on our model. And that's kind of where we see them situated within the income statement as well.
This is another an area that has opportunity to really look at your spending habits. We'll get into that in the reporting section, and Taylor will go over that. But this is the area you really drill down to see what you're actually spending money on. And then look at how you can, here's the challenge. Go back, pull your profit and loss, drill down into each category, look at how you're spending your money, and find 10% to free up for profit.
Mm-hmm. So I think we've rounded out the input stage of this model. Now we get to dive into the fun stuff. So now that we have all of our expenses laid out, we want to save and view the reports. So once you have everything in place, now from now on, every time you log into Framework, you'll land on this page, the benchmark page, where it has all of your tuition and the 5 pillars that we've identified as very crucial to achieving profitability at the top, as well as the corresponding reports down at the bottom. So based on all of our inputs, let's just go ahead and, I like to minimize this and then drill down as we go. It's kind of daunting looking at every line item that we had in place there all at once, so we can do our analysis from top down. So with all of our inputs in place, we can see that the industry benchmarks are to the far left with our actual data in the middle, and then our variance comparison to the far right. So based on what Framework is telling us is that with our annual net revenue, we should be achieving somewhere in the neighborhood of annual expenses around $778,000 compared to what we're actually doing is $717. So we're in the low sevens rather than Framework saying that we'd be okay if we were in the high sevens. So we're doing a very good job, an overall picture of our expense management, but let's don't stop there, because we can have one really good spot that we're saving, but the other can use some work. So we want to make sure that we're really maximizing every line and achieving that efficiency everywhere. And for the most part, it looks like we're doing a pretty good job based on our revenue production. So you can see that we're doing about 25% better on facility costs. We're doing a little bit better on programming. We're really doing well on our admin costs. That could be for a multitude of different reasons. We just are a rock star and running a lean, mean machine when it comes to our admin and some of our other facility costs here.
I think the important thing, Taylor, to recognize here is that the information is providing a discussion point.
Yeah.
When I look at this, I look at the staff costs being so much lower than the average, and we're seeing that spike because of the demand to increase wages and minimum wage and all of that, and the benefits that we're throwing in. So I would ask, do we have that number accurate? And if we do, then that's fantastic, right? And we're also seeing administrative costs rise a little bit as we're paying for the ERC credits.
Right.
and then having to amend tax returns and so forth. So you're going to see a little fluctuation, but you can talk to it. It's a talking point to say, okay, we understand why, and next year's going to be a little bit different. So we might want to adjust those numbers to look at, the future, the way it's going to be versus the way it is now. So just some thoughts around
Yeah.
that.
I think that's a great point to not only just see where you stack up, but really understand why you're in the place that you are compared to the industry benchmark that's being said right here. Because to your point, this could be very much an input error. And we wouldn't know that unless we looked at this variance and be like, I really feel like my staff costs are a pretty big burden on my operation, but this is saying something different. So that may be just, asking those questions, making the conversation out of it, really drilling down into the why and the how behind what we're inputting here.
Yes, and if your staff costs are exceeding 55%, and you saw what makes up that cost center, so we call that a cost center because it's got a whole bunch of other expenses related to it. They're specific to that center. And if you're seeing 60, 70, percent, there's a real issue that needs to be addressed. One, enrollment, and two, tuition increases.
Exactly. That's exactly right. And speaking of tuition and making sure that we're maximizing that, one of the key areas that we're seeing, and to exactly what you were saying earlier as we were inputting our discounts, is that we're pretty much double where the industry likes to be at this moment. And it's eating up a chunk of our profit, over $100,000, that essentially could go straight down to the bottom line. Now, in practice, that is very, very hard to do, eliminating all of your discounts, but we can have a more strategic approach about which ones we tackle and how that affects our profitability, and take a little more of a tailored approach in that area. So this is a great landing spot. It gives you a ton of information right off of the cuff, but there's more. So we're going to jump in to what the report section looks like for each one of these sections. And all of them are very similar. The visuals on the right-hand side may be a little different just depending on what the model is trying to tell you, where the model is telling you your opportunities lie. But in general, we have our insights page here, gives you a brief introduction to what this analysis looks like, some best practice recommendations, as well as some of our articles and videos that we have linked within the model to get you on your way and to get these things implemented into your operations immediately. So we can see right off the top where we have the breakdown of by classroom, where we could be if we were fully stacked within that classroom from a revenue perspective, and where we are before discounts. So we can see that there's some opportunity in just about every single line. So it gives you an understanding of, from a classroom perspective, where your greatest contributors are to your top line and where your areas of opportunity are. And then you can kind of drill down into why are those your areas of opportunity. It could be a staffing issue. It also could be a curriculum deficiency in some places. So you can kind of drill down into what the numbers are telling you based off your revenue into different components. And the other sections here should be telling the same story and confirming those things as well.
What I love about that, Taylor, is if you are struggling in a certain area, you can just come in here and play in that area, in that pillar or cost center.
Yeah.
You don't have to sit here and update the whole thing. You can just play with that specific area.
Yeah, that's exactly right. And one of my favorite places to play is, you guessed it, the discounts place. Trying to figure out which ones we could take away. Can we hold on to a couple just because we know that that's a major ad for either the industry professionals around us, or it could be a staffing discount that is just really sticky and we need to keep it in place because we have some rock star teachers that are taking advantage of that. We can see how that's broken down in the what if forecasting. So off to the right-hand side again, it has everything broken down nice and neat for us, showing us that we are just pouring discounts out of our revenue stream to the tune of 11%, and showing that if we were fully stacked in all of our classrooms, we should be achieving somewhere in the neighborhood of a 1.2, almost 1.3 million dollar revenue generator. Whereas after all of our discounts, we're barely hitting, 850. So there's a lot of opportunity here within discounts, and this model will show you kind of where those areas can be hit. So we've identified that not only limiting discounts, but increasing your tuition rates can be a compounding effect and how it impacts your profitability from a top line perspective. So we've added a tuition adjustment piece here too, so that you can also play with your discounts as well. So the big question a lot of times that Christine and I come up against is, I just did a tuition rate increase. What do I need to do again? A lot of times we're going to be like, ramp that puppy up because your expenses are really getting tight. So we always say, if your market is sensitive to it or is not sensitive to it, which is a lot of the case, try to get it up to that industry standard of the 8% range, because that's when you're starting to see your expenses and the revenue increase start to offset each other. But a lot of times it's going to need to be closer to that 10% range on an annual basis. And a lot of times that's a really hard number to hit all at once for your families. And we combat that by saying, take a look at your discounts, and this tool allows you to do that. If I take my discounts and I just eliminate, 10% of my discounts and, increase my tuition just a little bit more, I've seen great results already within how that affects my discounts while giving a very minimal increase of tuition overall. So this is a great tool to play with and to really find some insights. We've also added some remove discount features, remove discounts from different classrooms. So you can see if I removed any and all discounts from my infant and toddlers, how does that change my overall revenue breakup? And what does that do from our revenue perspective? So we can just kind of play. It's a great place to play, ask questions, really get some great feedback, direct feedback from those questions that Christine was alluding to earlier. And Christine, I know that you use this tool almost as a baseline in some of your analytics, because I know you go even further into what it looks like from a revenue and discounting enrollment perspective. But what are some direct implementation that you've seen recently and how this tool has impacted your clients?
Well, it brings to light, on a regular basis, the accuracy of what's really happening in their centers. And we go as far as addressing this with multiple centers, even to the point where the directors are getting involved now. So you can tell when an owner's been using this regularly, and then it evolves into the next level of usage and impact. And so we've had actually directors get involved more on this and the budgeting side of things. And it's really, really, the results are phenomenal.
Mm-hmm.
And, at the end of the day, we're really looking for a net profit of 15% or better. And that's before the depreciation, as Taylor was showing you before in the reports, before, depreciation, one-off grants, all of that. That's what we're looking for, is that 15%. And that means that you're sustainable, which is wonderful.
Absolutely. But this is just one of the steps that we try to put in front of our clients to make sure that we are actively progressing and taking those steps to that goal that you're mentioning there, Christine, the sustainability and profitability, and just having that continued success. And it really starts with in hitting that profitability number, because you're able to open yourself up to more opportunity to invest, to add a different curriculum component, to add a few more staff members, to open up that new classroom, things like that. And this is just one of the tools that we found super useful to get you to that place. So kind of wrapping up the framework demo, you can see that we've added a ton of stuff in here to make sure that you have all of the information and available information at your disposal for you to make not only the correct decision, but the smart decision as you're managing your teams and your operations. And of course, Christine and I are always on the hook, ready to answer any phone call or any question that you have about this and how you can maximize and leverage all these different little tools and tips and tricks to your benefit. So jumping back into our quick little presentation to wrap up. So recommended best practices. What's next? So check framework and the summary as often as you can so that you can achieve those green light goals and get to those industry benchmarks to achieve that profitability that Christine was alluding to earlier, allowing you to free up a lot of that cash to invest in other places and take some opportunity elsewhere. Get into this model very frequently. If you can do it once a month, that'll be awesome. You will get more familiar, not only with the tool, but with your numbers, which is probably the most important thing. Understanding where each of your dollars are going and where each dollar is maximized is also a great tool to put in your belt and doing your analysis on a monthly or quarterly basis. And then to Christine's point at the end, she said, getting your teams involved, you see a significant buy-in and not only just making sure that you're running a tight ship, but also from a director or your classroom leaders understanding where those dollars are going and how each dollar can be leveraged to bring those opportunities back into those classrooms. So all very important pieces to kind of take into consideration as you're building out your team and as you're building out your framework tool and utilizing all of these different components. But once you've got the handle on it, what's next? Where can we go further? And how can we help you get there? As we were saying earlier, Christine offers, and I'll let her speak to it in just a second, some great services that allow you to level up all of your operational components and your financial understanding of how your business operates. Christine, you got one coming up here soon.
We do. I'm pretty excited about it. To your point earlier, I highly recommend that you play with that enrollment area, the classroom groups and so forth on a daily and weekly basis, that you're really paying attention to what's going on in those classrooms every day. It's crucial. And if you've got a wait list, as you said before, Taylor, you probably aren't charging enough. But if you're losing children, you're grabbing from that wait list right away, and there's no wasted time in filling those seats. As in terms of the QuickBooks training, if you are using QuickBooks Online, then we will absolutely train you to set up your financials to align with Framework and make it a lot easier for you to populate the information.
Yeah, so that's just one of all the services that we kind of tailor into providing you all of the resources that we can, you the owner or the operator, really the team leader of your business. We try to provide you leadership training, comprehensive financial services through Christine and her team, as well as feel free to just pick up the phone and give us a ring and send us an email, ask those questions. We are here at your disposal so that we can level up the entire industry and make sure that we're all succeeding toward the better goal of being a very sustainable and profitable industry in the long run. So as we wrap up, I want to conclude by saying thank you for joining us in today's webinar. We love getting your feedback. You joining our webinar and interacting with us really keeps us motivated and revolutionizing these tools and our services so that we can tailor our product and offering to your needs and what's happening on the ground level of the industry each and every day. So we're here for you. Please feel free to reach out to Christine or I or anybody on the Hinge team with any of your questions, even if it's not related to Framework in particular. If it's about, starting to put up a exit strategy or starting to think about what comes next for you and your business, we would love to field those questions as well. You can always reach us at hingeadvisors.com. And I'm sure we'll be in your inbox soon with another webinar that we'll be putting out or another framework training that will be coming soon. And again, if you're interested in utilizing QuickBooks Online, please jump on to Christine's services. She'll be more than happy to welcome you with open arms into her fold as well. So thank you for joining us today. We loved having you. We hope that we just got you a little bit deeper into your financial knowledge and gave you a little bit more insight in how you and your teams can level up. in the long run. So thanks, Christine, for hopping on with us, and we'll see you in the next one. Thanks,
Always
guys.
a pleasure. Thank you.